Yeah, good morning traders. So in this video, I'll be talking about structure, resistance, and support. So to begin, so what is structure? So structure, this is just the shape of a market, just like the way you are seeing the candlesticks on the chart, just the way, okay, just what the market, just what the candlesticks are doing. That's just structure, just the shape of the market. That's what we call structure. So what makes up structure is what we call resistance and support. So let me just explain a bit about this before I show you how these things will actually work on a chart. So when it comes to resistance and support, you can just use an example of a room where you have a floor and a ceiling. So if I take this as the ceiling of our roof and I take this as the floor. So in this case, resistance, this is a point which acts like a ceiling of a roof, whereby if you threw a ball if you threw a ball up to the ceiling in a room, the ball will go up and hit the ceiling, and then it will start coming down. And support in turn works as the floor, whereby when the market comes from the ceiling and hits the floor, it will hit the floor, and then the ball will bounce back up to the ceiling, and again to bounce back to the floor, and then will bounce back to the ceiling, just like that. So this line here, which I'm drawing the ceiling, is what you call resistance. So resistance is the point whereby when the market reaches that point, it will change direction and go to the opposite side. And support, this is where when the market is coming down and reaches this level here, the market will change direction and start going up. So resistance and support, they are not really lines, but they are more of levels or zones. What I mean by that is that the market won't come and stop exactly at this point, but it may come, maybe it may stop, maybe a bit, it may stop a bit higher, or maybe even a bit lower than that point. Okay. So having said that, which means if the market comes in this zone within these three lines, you may anticipate the market to change direction from there to change and start going down. And if the market came down to this point there, you may anticipate to say that the market may change direction and go up from this zone. But we have what we call confirmations, which can be confirmations just to show us, to just confirm that the market will either break or will bounce from there. So having these zones it is not 100% that the market is going to bounce from this level and then come back down. There are times whereby the market is just going to break this level. But when the market breaks this level, most of the times the market is going to break the level and then to test this same level, and then it will continue in this trend. Okay. Or if it is down, the market may break this level and then retest in this same level and then continue. What I mean by retesting is that the market will break this level, go away from it, and then come back to this same level, and then from this level go up, or it will break this level, come back to this level, and from this level it will go back down. So which means that if the market breaks this level, if it then gives you a confirmation for it to go down, then in this same level you may want the market, you may predict the market that to go up from this same level, because the market fails to break this, because the market broke this level and came back to it. So I think that's just about how that may make. So there's what we call strong levels of resistance and support. So a strong level of resistance and support, this is a level which has been tested multiple times. This is a level which has been tested multiple times, at least 3 times. What I mean by that is this. So if it's a resistance level, I want to see the market come here, test this level once, maybe come, test it again twice, and then I want it to come again and test it for the third time. Then I can be sure that when the market comes, I can anticipate the market to go down from this level. I can anticipate the market to go down from this level, because this is a strong level of resistance. Because when the market came the first time, this level maintained or this level managed to hold the market. The market came back down, came back to this same level. The level again managed to hold the market. So it means when the market comes back to this level, you can predict that the market might hold, and this price may again go down from there, and that's where you can enter positions from, either to go long or to go short, or in simple terms, either to buy or to sell. So when you're trading, when you hear when you want to buy the market, or when you anticipate the market to go up, then you are going long on the market. But then when you're selling, want the market to go down, then you are shorting the market, or you are going short on the market. So, but there are times whereby the market may come to this same level, come back, then come back, and then instead of the market holding, it breaks, and then the market may come down to the same level and then continue to its way, and this may go up from here. So this is what now we call resistance turns into a support. This happens when a level is broken. Like this level, which acts as resistance at this point and at this point, this level was broken, and the market came back to this same level, and they made this level to act as a support. Just a kind of, let's say, an upstairs house. In an upstairs house, you have like, let's say, 3 floors. Okay, like you have 3 parts of the house. Here you have the first floor, second floor, and the third floor. So if this was the house here, you can see that if this was the floor of this house, if this is the floor and this is the ceiling of the first floor, if you go on the next floor, this same floor, the ceiling of the first floor becomes the floor of the next floor. I don't know if you get the point. Whereby if you are down here, you are going to see this as the ceiling, but once you go up here, you are going to see this as the floor. So that's kind of a mechanism whereby the market breaks the ceiling and then turns the ceiling into a floor. And once when the market is moving, it makes fresh resistance support levels. So like in this same example which I drew here, the market made support here. It's made a level of resistance, came back to support, went to resistance, came back to support, broke resistance, and turned this into a support level. But what happened, if you have noticed, it made another level here of resistance here. So it came back to this level, which acted as resistance and pushed the market down, and the market broke this resistance, found another resistance up there, which made it now come back to this level of support here, and now the market is continuing in that same fashion. So all in all, what I'm saying is that when the market is moving, it makes new resistance and support levels. The market does just have specific support levels whereby the market it won't always come back to this level here. As it is going, as it is making higher highs and higher lows, it makes new resistance and support levels. Okay, so that's just so in like when it comes to support, so that's the resistance. So when it comes to support, going to look just the opposite. So support will act as the floor. So for a level of support to be considered as a strong level, it must be tested at least 3 times. So the market will come here, hit once, go back, hit twice, go back. When it comes here for a 3rd time and you have a confirmation, you can enter for a buy here for the market to go up. So from here you may anticipate that the market may go up from this zone here. It may go up from that zone because this was a strong level of support. The market came here, the market holded, the level holded, it went back up, the level holded, it went up, the market again came back here, and rather than the market, you can anticipate the markets may go up here if you have confirmations. Because the market, it can still come back and break this same level, because in Forex, nothing really is guaranteed in Forex. Anything can happen. But before the market does anything, it will still give you clues on what is happening. And you mainly find these clues in resistance and support. So, if the market doesn't give you a confirmation of entering a buy here, which means it is most likely that the market will break. Okay? So, in case that the market breaks, it's going to look something like this. Like you see the market comes down here, goes up, comes back, goes up, comes back, goes up. Maybe the market here, when the market comes back to this level, and then give you really a confirmation of going up, the market breaks this level, it is going to mainly retest this same level because this is the nearest resistance level which is there, and from here the market may continue going down, breaking this support and resistance, and also making other resistance and support levels here. You can see the market now continue in that fashion. So the market broke this level, and then this support level now became resistance. It is now support turns into resistance. Just like the example I gave of the house with many, like an upstairs house which has many floors. If you are up there, if you come down, what you are seeing as the floor up here, it will not become the ceiling if you are down there. Just as simple as all that. So now, let me now show you how resistance support will look like on a real chart. So this will just delete this. So this what resistance support will look like on a real chart. So when you go on a real chart, so this is how the market looks like. Sure you're aware of that by now. So this is a candlestick chart. So resistance is a point where the market, which is going up, reaches and then comes down, and support is where the level which is down, and when the market reaches that, the market goes up. So there's this level of support down there. As you can see, it was a strong level of support. Just adjust the color settings a bit. You can yeah. Just give me a minute. Okay. Yeah. So you can see that the market. You can see that the market was coming down, got into this level of support there. It found this level of support. This whole zone was a level of support. It's not just a line. Always remember that resistance and support, they are not lines, but they are zones. So the market came into this zone, tested once, went up, came back, tested twice, went up, tested 3 times. So when the market came here for the third time, you can enter if you want to expect the market to go up, or you can enter for it to go up. But you can see the market here tested once, tested 2 times, 3 times, 4 times, 5 times, tested 6 times. So the more the market tests a level, the stronger it gets. So a level which has been tested 4 times is stronger than a level which has tested only 2 times. What that means that a level which has been tested like 2 times is more likely to break than a level which has been tested 4 times or 5 times. But any level can still break according to the markets. Is not that the markets will always hold. Even a level which has been tested 10 times can still break. Okay. So you can see that the markets came to this level here, tested here, and then it went up. The market went up. It went up to another level of resistance. So this was a support level. So this was the level of support. So it's practically just want to draw a line or a zone where you see the market is testing a lot, where the market comes and turns around. So you can see this level of resistance up here. This was the level of resistance here, because this is where the market, because from this zone, the market came. When the market came and hit this support here, the market came back to this zone, came back down, came back to this zone, came back down, and when the market came back here, it broke this level, and this here and that week here retested, and the market went up from there. Therefore, when the market does that, we can look for other levels, like the other level of resistance which was there. It is this level which was up here, from up here. So there was a level of resistance here. This whole zone, the zone of resistance, and I think from up to there. So what you are seeing here, it is the market comes down to this zone, comes to this level of support, goes to this level of resistance, comes back to this support, goes back to the resistance, and breaks here to block the resistance, and made this same resistance as support, and it went to another level of resistance. So if you bounce a floor in the house, if you bounce a ball in the house to bounce from the floor and then go to the ceiling, so it should just be bouncing between those two levels. So as soon as the market breaks a resistance level, it is going to go to another resistance level, and if it breaks a support, it's going to go to another support level. So in this case, the market here broke this resistance which was here, and turned this resistance into support, and then it went to the second resistance which was in its way there. So the market came to this level of resistance. So the reason I'm saying it's a resistance, because I'm seeing that the market here tested 1 time, 2 times there. So I'm looking for it to come for the third time. So the market came here, tested this level for the third time. So I could have entered a small sell there, or have gone short there for just a short amount of time. Because if you see there, if you look to the left there, you can see that this was also there was a level of support down there. This is where the market came hit there. This was where the market, this was resistance. So the market came from this level and then came back to this level here and made new levels of support and resistance, made new levels of structure there. So it made this new level, and the market bounced from this level, came back here, and then it went up to this level. went back into this level. It came back to this level of support down there, and then it broke this level and then retested and then went down from that level. So the key thing about this, you must just draw a zone or a line where you see the market is touching multiple times. Just draw a line or a zone where the market is touching multiple times, because those are zones where the market is likely to turn from again. So that's just about that. So when the level is broken, like a resistance or support is broken, so when the resistance is broken, to become resistance turns into support. When support is broken, to turn into a support turns into a resistance. So if you are going to mark up a chart of resistance support, you just look at where the market touched multiple times. So like if you can see, this is the one zone where the market touched multiple times. It came here, hit here, tested the multiple times, tested this level multiple times. So what you want to see in future is, if the market comes back to this level, you may want to enter a sell, or you might want to short the market if you get a confirmation. Or you may want, or if you don't get a confirmation, wait for the market to break and then you enter for a buy. So in this case, you can see the market here came back here, hit our level, came back down a bit, and then it broke our level and then retested, and then the market went up just like that. The market again, it made another level here of structure there, where the market here it broke this level and retested to it and then went up, and then it continued breaking other levels of resistance support. So that's it in this video. So that's it for this video.